G'day folks, Jim here from Orchard Forex. It is Thursday the 18th of June. Well, it's been a mostly choppy sideways session on Wednesday as traders take a more circumspect look at what's going on across the globe, with the focus seemingly changing a little from the prospect of increasing economic growth as economies reopen to the chance of a second wave of the COVID virus. 6 US states have reported record increases in new cases, while controls have also been reinstated in China, with neighbourhoods being locked down and flights in and out of Beijing being cancelled. An increase in cases has also been seen elsewhere around the world, and this has taken some of the wind out of the risk-on mood seen in the last week or two. In terms of markets, today's focus is going to be on the Bank of England meeting and the chances of it adding an extra £100 billion to the asset purchase facility. The Swiss bank also meet, and then eventually in the US session we get the weekly jobless claims, which won't paint a pretty picture again. And before then we get the Australian jobs data, which will provide some volatility in the Aussie. US stocks closed mixed, while most of the FX pairs have traded within a range, and by looking at the trend table I'll show you in a second, we can see that markets are generally in a state of indecision, although I think there are a few points worth noting. This is a dollar-yen chart here, but I just want to have a look at the trend table first. Okay, so here we have the trend table. Now, stock markets did close a little bit lower. The thing that I find most interesting, though, is although we haven't been doing an awful lot, I don't do a lot in the yen, the yen does appear to be strengthening a little. We mentioned in yesterday's video that euro yen could trade a little bit lower, which it has, not a great deal, but the 4 hour and the daily charts do still point to lower levels ahead, and I'll show you the charts in a second. As I say, dollar yen also looks a little bit heavy. Elsewhere it all looks pretty mixed. There's a lot of blue on the charts showing the indecision of markets, really, so I wouldn't be surprised to see more choppy trade today. The weekly jobless claims, I think if anything, they spring a surprise to the positive side. So we might see a bit of an upturn in the markets, but I don't think we're really going anywhere too far at the moment, and there's nothing that really stands out to me. So if we go back to the dollar yen chart, and here we have it. We're sitting above 107 at the moment, and the charts aren't actually really showing us a great deal at all. Although the dailies might be beginning, as I say, might be beginning to turn a little bit lower, and but the hourlies also look a little bit heavy. So going back to the 4 hour charts, we've got this minor support level here, and that comes ahead of the 50%, 106.40, and this low down around here, so 106. But I do suspect we might be headed in that direction as uncertainty persists. And if we broke down through this level, then I guess we can head back towards the 61.8 level, that's above 105. That's some way off at the moment, and I think it'll probably be a slow move. Likewise, if we have a look at euro yen, okay, here we have a 4 hour euro yen chart, and it's a little bit lower than where it was yesterday when we spoke about it in the video, and the 4 hour charts do look heavy. The dailies look heavy, so I prefer to be short, probably looking for a test. This chart's a little bit messy, I'm afraid, but looking for a test down here. This pink line here is the 200-day moving average, and that's sort of 119.5, so I kind of like the idea of going back down there, which kind of ties in with sort of 119.40.50, this 50% FIBO level here. So I probably prefer to be short, looking to sell into strength. I'd probably have a stop loss above this 121.20 level in euro yen, but essentially looking to trade from the short side for the time being. Moving along, this is a daily chart of the dollar index, and the momentum indicators do seem to be trying to bottom out to push a little bit higher. There's obviously going to be good resistance around this level, 97.40, where are we at 97.10, so 40.45. If we can break above there, then I think we can possibly head back towards this sort of 98.40 level, but that remains somewhere off at the moment, and in the meantime it might end up just being choppy. But on the basis I do like the dollar higher, I think we can still see some downside in the euro. And here we have a euro chart. Now, I mentioned yesterday about the chances of this head and shoulders. We need to break down below 112 in order to validate that. And at the moment, we're chopping around in this 112.5 area. And it may well be the case. There's nothing out of Europe today. And it's really just the Swiss Bank and Bank of England meetings, and then the US jobless claims. If the jobless claims come out better than expected, we could see the US dollar push higher. Whether it's got the strength to push through this support line here for the euro, I'm not really quite sure. The 4-hour charts do look slightly negative, but the hourlies are looking vaguely positive, I guess. This is the head and shoulders I was talking about. So we may just duck around here underneath the 200 and 100 hour moving averages today, around sort of 113 level. But if this level does give way, it's down at around 111.80 now. There's 200 points on the downside, which would take us back to 110. I'm not expecting any huge moves today, given the lack of market moving data. But the dailies do point lower, as I've said before, and I prefer to be short the euro than long. Going to the Aussie chart with the unemployment numbers due out, the dailies do look heavy, but we're sitting on this support line off the 55-cent low seen in February. If we do break that, I think we can head lower. This is the support line, as I say, and that's coming in pretty much at yesterday's lows, around 68.5. If we go through there, then I think there's some downside potential. Whether we can do that today or not, I don't know, but 67.70 is this support level here, and below there we're heading down towards 67 cents. That's 67 cents. So that's it for the Aussie, but the short-term indicators are looking very flat, so it's a bit of an even money chance at the moment, I think, and we may just continue to chop around here. So I do prefer to be short the Aussie, but if we were to get back above that sort of 69.30 area, where this comes in, 69.25 now, the 200-hour moving average, I think I'll probably be out of the position. Just quickly on other markets. Moving along to the S&P, well, we're not doing an awful lot, as you can see. It's been there's a 4-hour chart. It's been a session of consolidation. The 4-hour charts are flat, but the weeklies do look slightly negative. I'd suspect we might be heading down to below 3100, but overall, I think we've had this uptrend, and now I think we're in a period of consolidation where it's just going to remain pretty choppy. And you can probably look at trading a range between, I don't know, sort of above the 200 day moving average, which is just above sort of 3,000, and below this 32.30. I actually think we're probably not going above this 31.65 level for the time being. So I'd use that as a range, 31.65 to 3,000, and probably just trade that range with a minor bias to trading it from the short side. Quickly on oil, which we've been watching, there's no real change there. Oil did lose a bit of ground today, but it's just trading sideways. As I've said before, the indicators are looking pretty neutral. As I've said before, the dailies are suggesting that this consolidation can continue. If anything, we're looking a little bit heavy, but as I have said before, as long as we stay above $33, I like the idea of this of breaking above this resistance, and then with a measured target up here of around $50, $55. So that's about it today. We'll have to wait and see what happens with the Bank of England, Swiss Bank. The Aussie data is coming out shortly, the unemployment data. That's I think it's 7% unemployment headline number, and 125,000 jobs are supposed to have been lost over the course of the month, but we'll have to wait and see on that one. So in the meantime, we'll be back tomorrow. Have a good day's trading, and talk to you then. Cheers, bye.